Thank you, Tobias, and thank you, IJF and Informa for inviting me to this session. I'm really delighted to be here. I'm going to be talking about the Indian rooftop solar and the storage market as it stands today, including the prospects and the challenges and so on. So I must say, Tobias, I think your presentation was fantastic. I think that is it almost looks like a utopian dream for the Indian consumer. I think this is where we would want to be maybe in the next 10 to 15 years. I think realistically, I think it is going to take that long. Also,
five, please.
And I think what was interesting was that I think the consumer aspirations and the needs and the drivers are very much the same. But of course, there is a very different behavior and a response to different tariff structures, different power supply situation on the ground, and the different viability factors. So I will now share my screen and I hope you can all see it.
Yeah.
Okay, thanks, Amit. So just a very, very quick introduction. I think most of you already know that we are a consulting and research company specializing in the renewable sector. I guess two things worth highlighting. One, we take great pride in being independent and analytical. So we don't like to sugarcoat things, and we like kind of take a very realistic view and not try to sugarcoat or positively dress anything. The second thing is, because we are 100% focused on renewable energy, we always try and bring strong domain expertise and sector insights into all the work that we do. COVID has been actually good to us in a way so far. We've had some very high quality work on behalf of various, private equity investors, developers, and equipment suppliers. And I think we continue to be very, very busy, particularly on rooftop solar and distributed renewable markets. So I hope that I can share some of our insights with all of you today. Just a very quick introduction to India RE Navigator, which is our online portal for the sector. You get 24/7 access to all the key trends in the market, including tenders, projects, policies, etc. So go there and have a look, and I hope you will find it useful. In my presentation, you will find that there's much more emphasis on rooftop solar and much less so for storage, and I think that is the nature of this market. Rooftop solar really is now a reasonably mature market in India. The market was kind of flying away, growing almost 80 to 100% year on year until about start of 2019. And since then, unfortunately, we've seen a few challenges, market slowing down. Last year, we saw the volumes came down by about 25%. And this year, of course, the last quarter in particular has been really bad. We expect less than 100 megawatts of new installations in the April to June quarter. And I will talk about impact of COVID later on in the presentation. I think Tobias talked about how the tariff structures in Germany and other countries are affecting the shape of the market over there. I think in India, it's very much the same situation. This slide shows how tariffs are determined on the basis of customer segment, and the C&I consumers pay the highest tariff, and in turn, they subsidize the agricultural and the domestic consumers. And that is what is driving the growth in the rooftop solar and the storage markets. The highest tariff paying customers are the ones who find financial savings from rooftop solar more attractive, as the cost of rooftop solar for these customers is about 4 rupees. So they can stand to make very attractive savings. For the residential and the agricultural customers, there are almost no savings or very little savings, barring some exceptions. So these markets are obviously much more slow in growing. This slide shows how the rooftop solar market is very heavily dominated by the private C&I customers. And the reasons, first reason, they want cheaper power. They want to reduce the cost of power to stay competitive, to improve their profitability, to stay ahead of the competition. The second and a big driver for them, equally big driver for them, is reduction in carbon emissions. Many of the large C&I consumers, both because of their internal initiatives as well as some external compulsions, for example, renewable power obligations, they are keen to reduce their carbon emissions and hence improve the renewable energy penetration. And rooftop solar is really the first port of call for most consumers when it comes to try and buying renewable power on their own. So that's become very popular with C&I customers. Government customers, there's a huge push from the government for all government departments to adopt rooftop solar, but the market has not been, there's not been a smooth sailing for the market. Multiple reasons. Companies have found it very difficult to participate in the tenders, which tend to be very aggressive. Many tenders, there have been some conditions imposed around trying to match L1 bids, which the market has not found to be viable. And then, of course, barring some large-scale installations, the average size of installations in the government sector has been pretty small, at about 40 to 50 or less than 100 kilowatts anyway. And I think those kinds of installations people have found slightly more difficult to implement and to scale up over a period of time. The residential market is still roughly about 200 megawatts a year. Very small, largely because of the low residential grid tariffs. Now, we were expecting 2020 to be a breakaway year for residential rooftop solar. Reason being, one, the government has been proposing to give subsidies of 20 to 40% for residential systems when subsidies have been withdrawn for all the other consumers. Second, of course, the costs of these systems have come down very significantly because of costs in module prices, BOS, and other cost parameters. But then I think those kinds of benefits and opportunities have been somewhat eroded by other factors like, for example, safeguard duty has come in, GST has increased the costs, financing has been a challenge. So again, I'll come to that a little bit later. The really good news, in addition to the fact that the most C&I consumers are very keen to adopt rooftop solar, is that now we have a very mature and thriving ecosystem comprising both the installers, the contractors on one hand, and the financiers on the other hand, in particular equity investors. So there is a lot of equity investment available today for the OPEX business model, whereby third-party investors come and own the assets and supply power to the C&I consumers under a PPA framework. And as you can see in this chart, there are some very large ticket IPPs, private equity investors, even sovereign wealth funds who have jumped into the C&I renewable market. Shell and Petronas, two of the world's biggest oil and gas companies, are active players. So really, I think for the large C&I consumers, it is very easy today to not only build a rooftop solar system, but to try and get financing from third-party investors and lenders. Coming to the challenges, I think, let me just try and explain this slide. So this is like we have consumer size on the y-axis and the financial strength of consumers on the x-axis. So most of the industry today is really focused on large blue chip customers, offering them large individual installation sizes, good bankability for the PPAs, and this is now becoming the hotly contested area of the market, very, very competitive, more than 10 to 12 large developers playing active in this market. But the rest of the market, all this market here is pretty much, I would say, still underdeveloped and under-catered to. The reason, I think, twofold. One, financially, most developers are still not willing to finance any client who's less than A-rated or who is installation size where it is less than 200 kilowatts. So the RESCO solutions are not available for these smaller customers. Even debt financing is a bit of a challenge, with most NBFCs and banks demanding collateral, cost of debt financing being as high as 13, 14, or even as high as 16 to 18%. And that, of course, is not seen as viable by the consumers. Uh, the second challenge facing the rest of this market is that, particularly the MSME customers, they feel that they're not catered to by them, by the industry, and they find it difficult to make the choices and the informed choices about the vendors, equipment selection, configuration of the system, etc., etc. And I think they really need a little bit of a helping hand in trying to make the best possible choice for them on business model, financing, grid connectivity, etc. I think net metering policy framework, we have net metering or grid, gross metering policies in place now across most of the country. The problem is that the policy landscape is becoming more and more unpredictable because the discoms are pushing for withdrawal of free net metering. We've already seen some of the largest states, including Uttar Pradesh, Tamil Nadu, Gujarat, and Karnataka, trying to limit net metering policies for C&I consumers. Some states are even trying to impose charges for installation of rooftop solar systems, and that kind of uncertainty is a major risk factor for this market. I think Maharashtra is an interesting case where the Maharashtra Discom was plugging for same kinds of changes, i.e. withdrawal of net metering, levy of more charges, but the Maharashtra regulator has provided a really interesting decision which can hopefully pave the way for more such policy across the country. One, Maharashtra regulator has said that net metering has to be allowed for all the consumers. They have said that free banking is not viable for the discoms, so they've imposed some banking charges, which I think all parties are happy with. And finally, they've said that grid charges for net metering connectivity can be levied, but only if the rooftop solar capacity on an aggregate basis crosses the 2 gigawatt threshold. In other words, what they're saying is that so long as the market is small, it still needs to be nurtured and it still needs to be paid for and subsidized by the state and the discoms, and hence no grid charges should be levied. And I think that is really a middle of the road solution, which should keep both discoms, consumers, and consumers happy, and hopefully paves the way for policy clarity across most of the country. The other major issue that we see, which is going to become a bigger challenge going forward, is this issue around import duties. Now, there is, as most of us know, the government has been planning to, jack up import duties and trying to promote Make in India policy. The consequence, of course, is that as these C&I or private installations have got no change in law protection, the cost increases are directly fed on passed on to the investors and the consumers, and not having the clarity in terms of what duty is going to come for how much period of time is a major risk factor, and that is kind of slowing down the market right now. I talked about the residential market, how small it is, and how MNRE has been trying to support this market. So MNRE announced a 4,000 megawatt scheme for installation by March 2022, planning to provide 20 to 40% subsidy for residential systems. And now, in effect, what has happened is that the states have issued various tenders and schemes aggregating to about 1,000 megawatts, but less than 1/4 of that has been actually allocated to the industry. And then MNRE has separately set aside funds for, as of date, only 471 megawatts. So there is a huge gap between obviously what the government has planned and the real development on the ground. Now that slow disbursement of funds, together with all the uncertainty because of COVID, still means, in our view, that residential market is still some time away from realizing its potential and will continue to struggle at about 200 to 250 megawatt levels per annum for the next 2 years or so. Coming to impact of COVID, I think it's very difficult to know how this is going to play out in the end. But I think for the time being, we can only say that power demand in the country is obviously down for the year. More importantly, it is down by 10% more in the CNI segment. Discoms have been hit very, very badly. We expect discom losses to increase by 3 or 4 times this year in comparison to last year. Um, Module costs have fallen very substantially, which is a plus point, but then that's been some of that cost reduction has been offset by increases in installation costs and duties and other factors. So a little bit of a mixed story, but then financing environment has become more challenging. So on the whole, I would say COVID impact has been negative, unsurprisingly. Our on the ground checks basically show that there is a huge interest in the market, and the customers are keen than ever to adopt rooftop solar systems. But I think financing and policy challenges still mean that the growth of the market is going to be slow and the recovery is going to be extended over a long period of time. Very quickly, without taking too much time, I will come to storage. The behind the meter storage market in India is not new. I think particularly in residential installations and some of the critical industrial applications, off-grid activity has been quite high, particularly because power supply on the grid has not been very reliable. But there is talk about a huge market potential. IESA and the Smart Grid Forum have basically said in a report completed on behalf of the government that behind the meter storage potential is as much as 800 gigawatt hours by 2032, which I think is very wildly optimistic actually. Our estimate would be 1/4 or a little bit less than that. Having said that, I think the prospects are obviously very, very positive in not just power backup, but there are new business models which are becoming viable and increasingly attractive financially as we progress over time. Reduction in diesel usage, optimal use of rooftop solar systems, particularly as net metering is phased out. Peak shaving, because many customers have to pay a very high fixed charge once they move their grid connection voltage levels. So they can actually try to reduce their connected load by using batteries smartly and in the process reducing their fixed costs. Power factor correction, balancing and ancillary services. Now some of these opportunities are not available today because of the market design and the regulatory design, but we do expect that over a period of time, these applications will open up, hoping to realize the potential of this market. Now, there are various factors holding back the behind the meter market. The first and the most obvious one is the high cost. Cost of installed battery systems today is believed to be north of $400 per kilowatt. There is a very wide sense that until that cost falls by another 40 to 50%, it is not going to be viable. Very interestingly, I was speaking to a few installers and system integrators last couple of days, and what they said to me was this: that there's a big problem with availability of strong bankable suppliers, and what they mean by that is that there is a little bit of a chicken and egg situation here, because the market is not there in terms of volumes and scale. All the large installers, the kind that Tobias talked about in terms of Narada and Tesla and Fluence, etc., they're all basically keen only on the large scale installations. They're not able to justify spending time on a half a megawatt hour kind of installation because the cost of that installation is very, very high. So they are interested in large installations, which means that the bankable and proven suppliers in the small scale retail applications are actually almost non-existent. And because of that, the banks are not keen to provide financing for storage systems. So there is a little bit of a chicken and egg situation there, which will sort itself out. But again, I think it will take a little bit of a time before we do that. And then, of course, I talked about the regulatory design needs to evolve to allow, more time of day tariff differentiation, a higher fixed cost in the grid tariff structure, more ancillary services provision, because of which hopefully the business cases for the end consumers can develop and evolve. And finally, there is the safety risk, which still remains a bit of a concern for the end user. So with that, I'll just quickly talk about my conclusion and assessment of the market. Without a doubt, it's a very high growth potential. All the market factors and parameters are moving in the right direction. But what we need more than anything else is policy stability and visibility. That is the number one demand of the investors and consumers today. We need more affordable financing. And I think we've seen a little bit of innovation in the industry by more NBFCs coming up, more developers offering hybrid financing solutions. And I think we need a little bit more of that. We need more customer segments to be covered for the market to realize its potential. And finally, I think consumer education and quality assurance are going to be very, very critical, particularly for small consumers. So with that, I end my presentation. And thank you very much for listening to me. And I'll be happy to take any questions later on. Thank you.